Hey guys, Stockaholics, thank you guys for being here today. Shipping dilution traps. I think shipping is a notoriously difficult place to invest in, both because of its highly cyclical nature with very short booms and often very long busts, but also because of some of the behaviors that some of these companies are involved in relation to this topic today of dilution. I think that there are some companies that may or may not have their investors' best interests in mind. We're going to go over some of the things that some companies have done today. And I'm going to be sharing some, I think, very easy ways to avoid falling into one of these kinds of dilution traps in this video. Okay, here we go. All right, so first of all, before we get into some of those egregious offenders in the space, I want to talk a little bit about dilution overall, I guess. If you look at any particular shipping company, let's say over that has been public, let's say over the last 10 or so years, I think you would probably struggle to find a company that has not diluted shareholders over that period to some degree. A lot of shipping companies get an advantage by being public because they get access to public equity. If you can raise money in a poor market to kind of keep the lights on, whereas some of your private competitors cannot, it kind of gives you an advantage, right? That kind of situation doesn't usually bode well for the shareholders. The chance that you will make money in that kind of a time frame is not great. But there are situations when I think that dilution actually makes sense in shipping, and then there are a lot of situations where it makes a lot less sense. So I wanted to explain that first of all. Now, like I mentioned previously, shipping is highly cyclical. It goes through peaks, collapses, there is a period where it bottoms, and then ultimately it goes through a recovery period. Now, the reason I'm showing you guys this chart is because the value of the ships that exist, if you think about a shipping company in terms of its assets, the value of those assets changes through the cycle. So if you are at a peak, generally your shipping values, as this chart says, will be very high. However, as you go through the down cycle, asset values also tend to go down quite significantly. If there's less ability to earn income on that asset, it is not a very valuable asset, okay? Now, I wanted to give an example of a potentially good dilution, okay? If we pretend that there is a shipping company out there called XYZ Shipping Co. It has 100 million shares outstanding, and the stock trades at, let's say, $10. So it's a $10 stock out there, okay? And we can imagine, this is hypothetical. Let's say that that shipping company's net asset value is currently trading at $5, and that company decides to purchase one ship by issuing additional shares at, let's say, an at-the-money public offering. They could do this at a rock bottom part of the market to purchase this ship at prices that are at some of the lower range of that asset value spectrum. And if they were to do this dilution when their stock is trading at a significant price above their assets, and when those assets are in the low range of the spectrum, this is a really accretive dilution. Now, I would suggest that even though this would probably be an accretive dilution, the shareholders probably still would not be very happy with it because if you are diluting shareholders at a trough, or in general, the share price is probably going to go down. But I think in the long run, it could be a very accretive potential dilution. Now, there are a lot of situations where there are examples of certainly bad dilutions. So in this example, we have a company called ABC Shipping Company. It's got the same amount of shares as the former, but instead, their stock price is trading at $5 per share instead of XYZ's 10. And the inverse is true, where the net asset value of the company is trading at $10 per share. So the stock is trading at half the value of the current assets in the company. There could be a number of reasons why this could happen, and it does happen quite often. It could be that the sentiment in the space is so poor that the company itself has just a poor valuation. But more often than not, it could also be because there is a significant lack of trust with the company. Shareholders don't have a significant amount of faith in the management of the company, and so they assign a value significantly lower than what the company's net assets would be worth. But in this case, the ABC Shipping Company decides to issue 20 million shares to purchase one ship, and they may also do it at a peak valuation. So this would be the opposite situation as this one. They are issuing shares well below the value of their current assets in the stock price, and they are buying vessels in a period in the cycle in which those values of the ship might also be very high. So this is not likely to be an accretive dilution. In fact, it is almost certainly going to be a value destructive dilution. Okay, I just wanted to explain this because I think that there is situations where dilution could make sense. And even though it is often ill received, and there are a lot of situations where it happens, and it for just to keep the lights on in a company in a poor market, but there are also a lot of really just poor dilutions that happen to shareholders and that are not value accretive as well. Okay, now the first company we're going to look at is an egregious offender, in my opinion. Not investment advice. This is a company called Top Ships. If you had invested $40 trillion when the company went public in 2004, today you would have a whopping $3.42 for every $40 trillion you would have invested in the company. And you might be wondering, how on earth could that be possible? It's not. There was never a period of time in which the share price for this company was $40 trillion. But what the company has done is continually dilute shareholders. It's very low valuations for those dilutions in terms of their net asset value. And they've done it on a continued basis for many years. And what that has done to their share price is kind of a death spiral where they go through periods of strong dilution. They issue a bunch of new shares through at-the-money offerings, and then they do reverse splits in order to stay on the NASDAQ. There's a very interesting article discussing this company. I wanted to go through some of the key points in this article. I like this one a lot, and it is entitled "Shipping is a Hot Top Ships is Still a Casino Stock with No Value." And I would also argue that although there are probably not as many egregious offenders as this particular company, there are many shipping companies that do some to some level, they do a lot of the things that this company does. Okay. Now, I want to go through some of the key points that this article went on. And this was by Sabra Capital Partners. Okay, there are few companies where investors lose 90% of their value over any single 12-month period over the past 7 years. There's a chart down here that shows you the average return any investor would have had in this company from 2014 to 2021. You can see that there are several years where if you had invested in this company and held it for the 6-month period, you would have lost 99.9% of that investment just in that time frame, and the company did not go bankrupt. Okay. TOPS has destroyed its shareholders repetitively through non-dilutive financing and insider dealing that transfers value from shareholders into the pockets of its executive team, namely the CEO and controller shareholder Evangelios Pistolios. Hopefully I said that correctly. TOPS is a unique shipping company. I would argue that it is not particularly unique, but it is unique in the degree to which it has diluted shareholders. That is a death trap for any investor with a time horizon beyond the near term. And I think that there are some day traders and there's a lot of kind of gambling type investing that happens in the stock, because I don't know what kind of a long-term investor would ever buy this company. Okay. In late 2015, when it was apparent that Tops needed to raise capital to fund its order book, we approached management on various shareholder-friendly financing options, including a rights offering backstop by our fund or a convertible note at a substantial premium to the prevailing price. We found out later that we were not the only shareholder to discuss funding initiatives with the company. We, as well as other shareholders, were summarily dismissed and shocked when the company elected to finalize a deal with its CEO at much less attractive terms to our proposal. The transaction that the independent committee of the board of directors approved consisted of a $15 million revolving credit facility and a $3.8 million in assumption of liabilities. This is a response from the company after he kind of tried to call him out in an email. Insofar as your qualitative comments on the recently announced transaction go, the board of directors is confident that it has fulfilled its fiduciary duties to the company and its shareholders, both procedurally and substantively. Thank you for your interest in the company. We always remain open to speak with our shareholders and hear their views. From our vantage point, the company's actions historically have enriched insiders, particularly the CEO, to the detriment of its shareholders. I think that is an understatement. Ever since the 2015 financing, Tops conducted multiple death spiral financings, which are designed to raise capital through convertible notes that are subsequently converted into equity and stock at significant discounts. Meanwhile, the company executed the following reverse splits to maintain its NASDAQ listing above $1 per share. I don't know how these kinds of companies have done this for so long and not gotten in trouble, but I think, in my opinion, it abuses the kind of the nature or the of public markets for some other purpose than what it should be intended for. Okay. Despite the incessant dilutive capital raises to expand Evangelos Pistiolis' empire, his holdings in the company have been preserved by the anti-dilutive protections in his preferred holdings. The setup with the preferred grants Pistiolis the ability to continuously and repetitively dilute shareholders while always maintaining and preserving his control and interests in the company. In the meantime, to add insult to injury for shareholders, as the company grew its operations each successive year, management fees due to Pistiolis measurably increased while the stock price plunged. So this whole time, the money that he is earning as CEO of the company is increasing through his management fees, while shareholders are just absolutely getting wiped out on a year-over-year basis continually. Comically, on August 17th, 2020, Tops authorized a repurchase program. Wow, sounds like they were going to turn a new leaf here, right? For up to 5.1 million of the company's common stock, but terminated the program 3 months later without buying a single share. The bottom line is that there is an inherent conflict of interest that exists between the management team and its minority shareholders. Given the company is domiciled in the Marshall Islands, there is limited recourse for shareholders against any perceived abuse. As such, this is one of the few shipping companies where fundamentals, net asset values, spot rates, etc., have no bearing on the stock performance when the company is committed to unending dilution of its common stock. Yes, earnings do not matter in this situation. Now, I would argue that this is probably one of the worst offenders in the space in terms of the behaviors that we just described, but I don't think that it is alone in terms of the kinds of dilutions that you see. And I'm going to show you some other companies that are engaged in a similar fashion and that kind of wipe out shareholder equity. Now, I am a huge fan of incentives, and this is a quote from Charlie Munger, one of the most successful investors of all time. Show me the incentive and I will show you the outcome. I think that Charlie Munger's quote here is extremely important for the shipping space. For me personally, I will never invest in a company unless I see that there is some kind of skin in the game from either the inside management in the company or some kind of high profile outside owner, that if there were to be some kind of dilution like the company Tops that we described, they would essentially get wiped out in much the fashion that all of the other common shareholders would. Now, if we look at some of the companies, you will notice that there is a pattern that emerges in these extremely non-accretive dilution kind of names. This is Tops Shipping. As we can see here, the general public is bag holding this company at 99.5% of the common stocks shares. And oddly, institutions own a tiny amount. I guess they're probably trading in the stock. There's another company that I think that is very popular recently, and it'll probably piss a lot of people off by me describing this. But this is a company called Imperial Petroleum. This is a spin-off of a company called Gas. Gas is now an exclusively LNG company, and then Imperial Petroleum is mostly tankers, but I think that they also have a few bulkers. Imperial Petroleum describes itself as a growth company, so they're kind of signaling right away that they intend to dilute shareholders to expand the fleet. Since they went public, they went public at, I can't tell, somewhere above 750. There was kind of I think that there was some kind of a stock frenzy here that also took place. They diluted over here somewhere, and they also diluted here. Again, if they diluted in some kind of a stock frenzy, I wouldn't hold it against them for doing that, because like we described in the beginning of the video, if you're diluting above NAV and you're purchasing ships on the low end of the cycle, it could be value accretive. But since that happened, they continued to also dilute. This is the shares outstanding for Imperial Petroleum. What's odd, and if you look at Y charts, it looks a little weird because it looks like there was another company called Imperial Petroleum at some point, but this is the one we started with in November of 2021. They started with 4 million shares outstanding, and they massively diluted all the way to 190 million. And if you listen to the most recent the one before the most recent conference call for Imperial Petroleum, there is a lot of very spicy commentary. I would recommend listening to the conference call's Q&A portion. Not the most recent one. I think that the shareholders were happy they hadn't been diluted in the last quarter, and also because the company was making a lot of money. But again, it's the price you're paying for the ships that you buy, and because there is also not significant inside ownership in this company, although the CEO of this company owns a tremendous amount of the Gas common stock, it is a red flag. It is suggesting that there will be significantly more dilution to come. If there is no incentive for these guys not to dilute, if their management fees are structured in a way where if they get more ships, and there is no punishment for them diluting shareholders well below NAV, I would suggest that there is a high probability that there will be tremendous non-accretive dilution in this company as well. That's speculation. It has happened if there has been dilution in this company before, but I know this is a popular stock, and we'll see. I'll follow it. I won't buy it, and that's not investment advice. This is another one. This is Castor Maritime, and I honestly hate talking about this one because I know there is a particular fan in this company. There's a YouTube channel called Finding Value Finance. he's talked about this company, and there is another person he talks to regularly, Scott. I think they've also talked about this company, and they talk about it in terms of the balance sheet, and they talk about it in terms of their earnings, and they talk about it in terms of the valuation. And again, just like Top Shipping, I would suggest that there's a strong possibility that none of that stuff matters. And because if you look at it in terms of their dilutive qualities in this company, they have been extremely dilutive. In the last 3 years, the stock price, if you had purchased it some point in 2020, was 25, and today you'd have $1.40. And by the way, this is also significant because the market that we're in, this is a company that I think is half dry bulk, half oil tankers. Dry bulk has had a reasonably strong market until the last quarter, and we've also just had a tremendous market in oil tankers, and the share price has underperformed, probably because investors do not trust the company. And I would suggest for good reason, because if you look down here, there is a token amount of individual inside ownership at 100,000 shares. Whoever owns it, I would imagine, owns far less in equity that they own in terms of their income from the company and their pay, management fees, etc. Right? And you know, again, there's a possibility the stock could go up. There's a possibility there could also be another one of these kind of frenzies that happen, right? But if we're not stock frenzy, I think this is another one. Just like IMPP, there was a period where this stock got bidded up in a lot of the other kind of manias that existed all over the stock market in the last couple of years. If there's no significant inside ownership, the chance that the company is value accretive over the long run is unlikely. And I would suggest that the probability is that this company, Imperial Petroleum, Top Ships, they're not all as poor as definitely this one, but I would suggest that the chance that these companies earn some kind of a return for investors through the cycle is unlikely. Okay. Thank you guys for watching. I enjoy criticism in the comments. I'm sure there will be some. Have a great weekend.